Fed Chairman Ben Bernanke says the recession has likely ended, but the world's biggest bond house does not expect robust growth anytime soon. We're joined right now by one of PIMCO's top economists for his forecasts. Richard Clarida is Global Strategic Advisor at PIMCO, Professor of Economics at Columbia University, and former Assistant Treasury Secretary under George W. Bush. Rich, very glad to have you back on the show. Thanks for coming in.
Of course.
Bright and early. So we just heard from Krugman speaking in Helsinki earlier, saying the end of the world has been postponed. Are you relieved?
I'm relieved, and I think that's right. I think we averted a disaster scenario, and I think the real issue now going forward is what does the recovery look like? I think the recession is over globally. The question is, do you get a V-shaped recovery? And let me remind you, V-shaped recoveries are 6-7% growth for 6 or 8 quarters. That's what we had in 82, 83. I don't see that sort of a V-shaped recovery. We'll have economic growth, probably averaging around 2 to 2.5%, but not 6 or 8%.
You've said that the U.S. economy will not see robust growth for the next 3 to 5 years. Do you stand by that forecast?
Absolutely. It'll be choppy, though. You could have some strong quarters because of inventory rebound. You could have some very weak quarters. So it's going to be a very choppy, volatile growth path with an average of around 2%.
Rich, let's talk a bit more about production, inventory levels. One other thing that Paul Krugman said is that he sees more than $1 trillion of idle capacity here in the U.S. economy. You agree with that?
I think that's about right. Yeah, that would be about 6 to 8% of GDP. And given that the unemployment rate's gone to nearly 10%, that's consistent with my estimate. Yeah, at least $1 trillion of excess capacity.
And what does that mean? What does that excess capacity get soaked up? I guess that's the question with the speed and pace and shape of the recovery that you're considering.
It gets soaked up in 2 ways, with economic recovery, but also some of that capacity becomes obsolete. Also, we've had a big shock to the credit markets, and you think of really borrowing is a factor of production to build plant and equipment. So you'll have a combination of growth and some of that capacity becoming obsolete.
So trade in the U.S. you think stays idle?
Well, trade has actually been a positive for the economy, in that our trade deficit has shrunk. That process has really been substantial. It's fallen in half in about the last year and a half or so. So I think that'll be important going forward, yes.
All right. Well, we know the Fed is meeting this week. So how do some of these factors frame the debate? We're sure it's going to be an interesting discussion in the room about whether or not to give a hint about an exit strategy.
I think the Fed is on hold throughout this year, throughout 2010. The Fed has actually done a good job in laying out the broad parameters of an exit strategy, but they're nowhere close, I think, to beginning to implement an exit strategy, if by that we mean raising interest rates. A lot of these emergency programs will begin to wind down of their own accord, but the Fed is on hold in terms of interest rates for a very long time.
Rich, you've been good enough to stay with us, so we're going to keep you. We're just going to take a quick break, and we promise we'll have more after this quick break, more with PIMCO strategist Rich Clarida. We are back as promised with Rich Clarida. He is Global Strategic Advisor at PIMCO, also Professor of Economics at Columbia University. Rich, thanks for staying with us. Before the break, you said, look, the Fed is on hold and for a while, yet the market seems to be pricing in something else. Why is that?
Yeah, absolutely. From our perspective, that's an opportunity in the sense that the interest rate futures price in a Fed hike that I just don't think is going to happen, and we can speculate on why that is, but sometimes those opportunities open up. It's also true in Europe. For the UK as well, they're pricing in rate hikes by the Bank of England that I don't see. So opportunities out there, yeah.
Rich, is this a question of inflation versus deflation?
Well, those are two very powerful forces. Near term, I don't think there's an inflation threat. We talked about excess capacity, a very steep recession. As you move out 3 to 5 years, though, you do have to look at potential upside pressures to inflation through commodity prices, global growth, and through the Fed's exit strategy.
When do you think we'll start seeing that reflected in long-term bond yields?
Wow, that's the $64 billion question. You know, right now the U.S. is able to issue a vast amount of debt, and there's a very healthy appetite for that debt. But obviously we're in uncharted waters, projecting $9 trillion in deficits for the next 8 years. And so certainly anyone who looks at markets has to be thinking about the ability to absorb that. But that doesn't look like it's on the short run horizon right now.
Hard to talk about these subjects without talking about the dollar.
Yeah.
I mean, we're seeing it hovering really near this year low versus the euro. There's a lot of people, actually, to your point about the markets, FX strategists saying, okay, we will begin to hear something from the Fed about an exit strategy that's breathed a little bit of life in. The dollar, some say, oversold but not overvalued. What do you say to that?
Well, I think the dollar downdraft, which is a decline in the dollar's value, but an orderly decline, is what we're going to see for the next several years, not every day or every week. But essentially, we've had a reduction in our trade deficit in part because of a weaker dollar. And because I expect U.S. growth to lag global growth, I think that'll be another factor. I don't see a crash landing in the dollar. I don't see the doomsday scenario, but a downdraft in the dollars, I think, in store for the next several years.
Is this a question of timing, sort of as the U.S. slows? To what extent can other countries pick up?
Exactly, and it's also an extent to which I think the Fed will be one of the last central banks to hike. We've already had some indications from Australia and Norway that potentially they could be hiking. And once you get into a situation where you've got banks that are in rate hike cycles, then the fact that the Fed is on hold will also keep the dollar's value down.
All right, well, speaking of the dollar, we probably should discuss the relationship between China and the U.S., the Chimerica.
Yeah.
Some people saying, Neil Ferguson on with us recently, saying it's headed for divorce. What do you think about that?
Well, certainly there are some important differences, and of course this now trade dispute as well is obviously not welcome. I think the key point to note is how robust has been the policy response from China in terms of fiscal policy in this crisis, really keeping China growth at a healthy level. Yeah.
Rich, you've been at the Treasury Department.
Yeah.
Was this a mistake on part of the Obama administration to be this aggressive with China over an issue as small as tires?
You know, it's a tricky one in the following sense, that under the agreement by which China entered the WTO, the U.S. reserved the right to deploy that, and President Obama did that. So I think probably we're within our right to do it. The larger question is, does it make sense in the broader relationship? And obviously, look, the Bush administration levied tariffs on steel, a decision that I was against. So certainly these things have a political connotation to them, and I'm aware of that. The initial reaction looks like this will not escalate into a trade war. If so, it was a gamble that they took, and has not proved to be a disaster. But obviously, those sorts of things would not be helpful.
All right, Rich, unfortunately, we have to leave it there. Thanks so much for stopping by.
Yeah.
PIMCO's Rich Clarida.